how we're hoping that this will increase the workforce of housing counselors around the country. And then our main presentation will be on Gabe Del Rio and his team, Jennifer Murphy and Lupe Hernandez, doing work to really figure out how to make lending, nonprofit lending, part of the toolbox that nonprofits can use, including housing counseling agencies, and kind of a step ladder of approaches that will give you alternatives, hopefully, for your organization, if it's the right fit for you. So hopefully this will be interesting, and we'll have time for Q&A. Certainly feel free to use the chat box as well. And then a quick reminder about NHRC memberships. And we've now expanded our membership, so you can do join or renew by electronic deposit. Still working on the credit card piece. It's complicated with our fiscal sponsor, but that's a piece that we're adding to the list. So let's get started just on the latest updates. So if Ebony, if you want to quickly change that, there we go. So as you know, a lot of what we do is advocacy, and not all of it is in Congress, but we work with the administration, and so CFPB and Treasury, and we also deal with, in different forums, with lenders and servicers. So we're very interested in problems you're having with servicers not working with housing counselors. So I know that actually there's been a lot of improvement this time around in the work that's being done. We need to know what the problems are and who it is that's not doing it. We think it's a lot of these sub-servicers and smaller subprime servicers, but we really need to have names. If you have anecdotes, examples, that would be really helpful. Shoot this as an email to Ellie and me. We will use this for an upcoming meeting we're doing with the CFPB. We'll also inform the other advocates about this. There's a whole team of advocates who a lot of whom have been on our calls at different times, who this will be very helpful to. So please put that on your list and do it today or tomorrow. That'd be very helpful. Similarly, there's a lot of interest in how the Housing Assistance Fund is working. So we understand it's not working well if it hasn't started in your state, but if it's actively moving forward, it's very helpful to know where the problems are. And these are things that we would also tell the advocates. We can communicate to Treasury, and this will be part of a meeting we're going to have with the CFPB if it's something that the CFPB regulates. So problems with servicers not participating, or not well, I mean, whatever, you tell us what those problems are. So same email, just let us know about those things. And the third area we're beginning to just look under the hood about is, what are the current predatory practices and scams? So things to swindle our clients out of. And we knew a lot about what happened during the foreclosure crisis. We're not hearing as much about this particular crisis, but suspect there are things that are happening under the radar, and we'd like to be ahead of those. Again, we'll be able to bring some of those up to the CFPB. We're in a bigger conversation with a number of advocacy networks about trying to identify what these are, and if you're the front lines, and we regularly, Ellie and I, get asked about what's happening in the field, and we count on you to tell us. So please shoot us an email. All three things can be included in those areas. It would be really helpful. Jot it down, and please help us out on that count. Okay, next, let's move on. We introduced her in our last call, but Christy Villalobos-Hauser is our new housing policy director. She's really been deeply engaged and already lining up meetings, and especially in the Senate. And so let's get the latest update of where things are at. Christy.
Hello, everyone. This is Christy Villalobos-Hauser. I'm the new policy director at NHRC. I'm so happy to be with you all today. So in terms of Build Back Better, since Build Back Better is not likely to pass, legislators wanted to repackage it into standalone bills with fewer programs. However, those repackaged bills are also not likely to pass. So this leaves us with a lot of advocacy work to do on the budget reconciliation bills. Unfortunately, funding for housing is at risk. President Biden did not include housing as a priority in the budget reconciliation bills, as per White House statements mentioned in CNN. So your advocacy work is essential to ensuring that housing investments are included in these reconciliation bills. So it's dangerous for housing to not be included in the budget reconciliation bill because the reconciliation bill allows for bills to move forward with a simple majority in Senate instead of 60 votes that are required under regular order. So please keep reaching out to members of Congress to highlight the importance of housing investments in the reconciliation bill. We urge you to ask leadership to talk to their Republican counterparts to consider housing investments. So Bruce, as he mentioned, he sent out a sign-on letter to increase support for housing investments. And I urge you to sign on if you haven't considered it already. We're trying to get it out on Monday, which is when members of Congress return from recess. And also in terms of appropriations, a third continuing resolution is expected to pass at the end of February or early March. It looks certain that leaders will reach negotiations. So this is positive news. So this gives us an opportunity to keep weighing in with members of Congress. And especially on the housing proposal, it includes $100 million in funding for housing counseling. So it's a lot more than the Senate's proposal, which includes $57.5 million. So we are still advocating for $100 million in housing counseling funding. So if you could reach out to both Democrats and Republicans to include this in the spending bill, that would be great. This is just baseline funding for housing counseling, and that's what we need. And then the Reforming Disaster Recovery Act. So we've met with both Republicans and Democrats to ensure that there's growing support for this bill. We've sent out some language to be added to the bill, which would be inclusive of housing counseling. This bill is especially important because it would speed up the CDBG-DR funding. So please try to meet with members of Congress or reach out to them, especially Republicans, to ensure that there is growing support for this bill. Just yesterday, we met with Senator Rick Scott's staff, and his policy advisor wasn't too aware of this bill. So you're very likely to make a difference with your work. Thank you.
Thanks, Christy. And just to highlight on disaster recovery, which obviously is a unfortunately growing part of our workload. The challenge right now is that there's strong Democratic support for it, but we're looking for Republican co-sponsors in the Senate and in the House. And especially we need Republican co-sponsors in on the banking committee, which is the committee that it will originate in. And we know that Senator Brown is very supportive. Senator Schatz from Hawaii is the sponsor, Democrat. What we need is senators from states that are impacted, and comes to mind Senator Tillis in North Carolina, Kennedy in Louisiana, but really any state that has Republican senators, it's really worth a conversation to say we need to get this through. And I mean, just to underline why this is important is this currently, if there's a disaster, Congress has to start a brand new bill and a new process and a new appropriations process to get the money in that would eventually come out to CDBG disaster recovery funds. Typically, this takes, I mean, if you're very lucky, though it hasn't happened in a while, it might be 9 months. More typically, it's 12 months, 16 months, and can be longer. And I mean, it's a problem with the whole process with Congress. What this bill does is it makes it a year-round authorization. So it takes out multiple steps in the process. It doesn't mean that Congress doesn't allocate for the money. It means that they don't have to do the authorization part ahead of time and advertise in the Federal Register. They also do a number of things around equity to make sure that the money goes to the people that need it the most. And often it's actually flowed more to wealthier people and less to low and moderate income. So there's some very good parts on that. This is all things that are valuable. Christy and I met with Senator Schatz's staff person who's a specialist on this morning. And the feeling is that there's still, even in this Congress, ability to move this forward and be pretty positive about it. So your advocacy on that would be really helpful. And certainly anybody you're talking to, especially in the Senate, please push the $100 billion for housing counseling in FY 2022. And there'll be more we'll do on this. And very shortly, we're going to start on 23. 2022, of course, is the year that starts October 1, 2021, last year. And we're almost 4 or 5 months into it already. So I'm going to work on both together and juggle both balls on this. But your role has been helpful on it. Actually, in our most recent meeting with Senator Schatz's staff, they expressed their appreciation both of the work you're doing on COVID-19 and the advocacy. So all good there. Good. Well, let's move on to Ellie and our one of our favorite topics, the job board for housing counselors.
Thanks, Bruce, and hi, everyone. So we've talked about this a few times. We just want to keep reminding you that the Housing Counseling Job Board is available for you all to post your available jobs. We currently have had 44 jobs posted, and we have 9 resumes on there. So you can also post your resume if you're interested in doing that. We are working with Housing Action Illinois to really get some folks trained and get them passing the exam, folks who are not currently housing counselors, and they're being given the opportunity to look at the job board and post their resumes and look at the jobs that are available. So this is the address here, and Christy put the link in the chat so you can get to it pretty quickly and easily. And that's it. And if anybody has any questions, feel free to pop them into the Q&A and I'll try to answer. Thanks.
Excellent. So let's go to our feature presentation. So Gabe Del Rio is well known in our field as both a technology innovator and a person who's thinking about kind of the long-term sustainability of our work and the impact of our work. And so he's under the Homeownership Council of America has stood up a pretty valuable program, and we'll devote the rest of the session to this. I know that Lupe Hernandez and Jennifer Murphy are on as well. So welcome all of you. Gabe, it's yours.
Thank you, Bruce, and thanks for your support in getting the nomination for the HCFAC. Certainly going to keep you very close and make sure that I'm carrying your voice in that work as well. So happy to be here, folks, and talk to you about what we call the lending ladder. So we'll give you a little bit of background about HCA, our work, our team, and then we're going to dive into some details around how nonprofits engage in the lending business and what kind of revenues look like, what does the regulatory environment, et cetera. And so we'll dive into that. We could go to the next slide, Ebony. So HCA, this is our mission statement here, building equitable access to credit for America's underserved communities. We do that in a variety of ways and primarily through our community lending initiatives and mortgage banking program, which this lending ladder is a part of. We call that CLIMB, Community Lending Initiatives and Mortgage Banking. So we work with CDFIs, investors, and others, and really focus in on how to build products and delivery systems that provide access to credit in mortgage for underserved communities. We focus on a variety of areas within underserved communities. You can see rural communities as underserved. You can see low income populations as underserved. And increasingly, folks are coming to the table focused on solving for minority communities, which are not necessarily LMI. And so the world of special purpose credit programs is budding. And we're happily helping in that regard. Next slide. So a little bit about us. We're a national nonprofit organization. We serve our mission by providing these unique services to groups, mostly in the nonprofit space, but always benefiting our target underserved home buyer. We have unique experience in this space. All of us on the team have run housing counseling organizations, lending programs, intermediaries, you name it, in this world, and CDFIs. And so we bring that experience to bear for our partners. We like to get on the bench and really help people and become part of their bench strength in doing so. And in our program of Climb, we've really seen that transformation in organizations. And so we can see valuable knowledge and concrete processes, enhanced products, new business lines, new program offerings, new partnerships, really great stuff that we're excited to see in our wake. Next slide. So I guess I already talked about our leadership team there, but we're known as experts in this space, and that's what we bring to all of our partners. We're going to tell you about the lending ladder today, and we'll also touch on the other services that we provide. So next slide. So this is our community lending initiatives and mortgage banking Climb program, and that's what that ties in really well with the lending ladder. So let's sort of climb the lending ladder, and we'll show you that next, Ebony. Next slide. So here it is. We're going to dive in and spend some time on this infographic. So we made this so that nonprofits could quickly and easily see all the different ways that you can engage in lending. And it starts all the way to the left in the red and orange zones. And that's starting in the red zone there. That's where we look at packaging, so loan packaging services. And there's a variety of examples of this and fees that actually exceed what we're showing there on screen. For instance, the USDA packaging program is one of the largest loan packaging programs across the country and involves a great deal of nonprofits, nonprofit intermediaries that facilitate that work. There are other examples in the private market. For instance, Bank of America has the Connect to Own program. There are other mortgage bank and bank examples that provide housing counseling organizations or nonprofits an opportunity to earn a fee for packaging up the borrower's income and asset documentation along with your your intake form and your certification of their mortgage readiness. And so this is sort of the way that you can begin entering in this space. And the biggest value that you can provide when you're not the lender yourself or when you're not the DPA provider yourself is to really get folks mortgage ready and to certify that mortgage readiness and make sure that they are getting access to all the best options out there in the market. And that's really what packaging looks like. The next one up on the ladder here, DPA lending. This is where you can administer DPA programs or lend. These are also soft seconds, so you can call them loans. They do sometimes sit on your balance sheet. Sometimes they sit on other folks' balance sheets or a municipality in your area where you are administering the program. This is an area of activity that doesn't require licensing, similar to packaging. I should say both the red and the orange zones there do not require licensing to do this work. Many organizations administer local down payment assistance for their towns, cities, counties, and often have programs themselves that they've raised to grant funds to administer out to first-time home buyers. Generally, this is the low-income realm here, but just to put on your radar, in the DPA space, when we're thinking about racial equity, it's really important to think about how we move beyond 80% AMI and go up the ladder, because there are a great deal of minority home buyers that qualify and have the ability to repay, but do not have the down payment or just enough cash to close. And so DPA makes a big difference there in getting those folks over the line. So that's the sort of first session or segment of what nonprofits can easily do and quickly launch these things. You see that there's no licensing required. We listed the, if you had capital for a DPA program, it doesn't take too long to launch those, get some documents that are compliant in place, and be able to issue that program out, get lenders to approve it and originate alongside it. And then, if you didn't have capital for DPA, just thinking about the timeline realistically to launch something like that, you're looking at, about a year or up to a year to put that kind of capital together, do the grant and fundraising process, and then issue it out after that. So these things do take a bit to get going in the DPA space. In the packaging space, you can see there's no, it's really quick to launch those things. If you can strike an agreement, get trained, this would be USDA inclusive. You can, if you can get your organization approved and then get trained and get started, you can do so quite quickly. The next segment here are the green areas, the green lanes. We first get into the first mortgage activity. So the first step on that is to be a first mortgage broker. And this is where licensing is triggered. So the organization itself would need to be licensed and have an NMLS license approved for your state. And then originators of that mortgage loan officers, would need to also be NMLS approved and licensed. So for thinking about getting your organization licensed, there's two different routes. You can go the standard route where you get approved just like any for-profit does. But many states have an exemption route for nonprofits. And so that has basically less requirements to qualify for the approval as a mortgage broker to be NMLS licensed, but it often takes a little bit more time. So that's just something to keep in mind. You can get a licensing company to go the standard for-profit route quite quickly and inexpensively, but going the nonprofit route, there aren't really many experts out there. And even when you get to the NMLS team itself, they often are pondering it because us nonprofits are strange in that way. So, but when you get into the mortgage brokerage space, you're looking at an activity that focuses on taking the application, shopping for loan products among several wholesalers that you would set up relationships with. You would find the best product and program for the client, help them to lock in that rate and select the product, pair it up with any down payment assistance that you or others have locally. And then you would send that loan off to the lender of record, who processes it, underwrites it, and closes it from there. So mortgage brokerage is really focused on upfront origination and the upfront disclosures that are required in TRID. But it doesn't carry the same amount of weight or responsibilities that the next steps up the ladder do, where you're taking on more and more responsibility for aspects of that work in the operation. So mortgage brokers get paid, on average sometimes 2.5 or more origination percent on the loan amount. And that's not something that the borrower is paying. That's something that you agree with your lenders up front in your mortgage broker agreement. And you'll set that fee with them, and it will then be automatic on all your loans. And all the loans that you price and access through those portals will include your payment on it. So you'll get paid 2% from the lender or more if you choose to. So we just used a $200,000 mortgage amount as an example, and 2% on that would be $4,000. So you can see the numbers there are referencing the per home buyer revenue that you could generate from that activity, given the loan amount assumption there. The next step up the ladder is to become a non-delegated, what we call mini correspondent. And what this involves is that you would set up a warehouse line of credit. This is often provided by the investors or that you're selling these loans to. So for instance, a wholesale lender would set you up as a mini correspondent and then also provide you with a line of credit. That is a frequent occurrence in the market. There are also specialty lenders that provide this. And you can use, for instance, a bank EQ2 loan. So if you have never utilized or deployed capital from a bank partner locally that's interested in providing these CRA qualifying investments, then potentially you could use that kind of a loan to meet your warehouse requirements. That means what the warehouse is that you are funding the loan. And that immediately after funding that loan, your investor buys it from that warehouse line of credit or buys it back from you. And so what this step does is they call it mini core or non-delegated, because the investor, are still making the underwriting decision. And that way, when you fund the loan, you have a pre-approved and committed purchase of that loan because they've already underwritten it. So it's a very safe activity. And what you get for taking on the additional risk or responsibilities really is the fees that happen for lenders. So processing you wouldn't get the underwriting fee, but you'd get a processing fee, an application fee, and a closing fee. And so we've put in some fees there to enumerate what that would look like if you were getting the origination plus some additional fees for that activity. Both those green lanes can be done with that same license. And in fact, you can go up this ladder with your same NMLS licensure. You really are changing in the background how you relate and how many responsibilities you're taking on for the end investor in the secondary market. So the blue lanes, I'll get into that. There's very few nonprofit organizations that sort of qualify for this level of work. If you're going to look at becoming a correspondent lender, you would need to be closing well over 120 loans a year. And so that's a threshold that many nonprofits have not yet met, or they stay under when they're looking at mortgage brokerage. Just to give you a notion, let me step back for a minute. A mortgage loan officer should be able to originate about 30 loans a year, conservatively. So, if you were looking at the activities in the green lanes with one mortgage loan officer and a healthy and active pipeline from your home buyer education and pre-purchase counseling, they should be able to produce at least 30 closings a year. When you get it, so you'd have to have multiple loan officers, right, in order to get up to this blue lane here, where you're looking at becoming the correspondent lender. And that means that you are going to perform all of the underwriting on behalf of the investor and that they've delegated that to you. So it's obviously a big step up in the operating requirements and risks, because you're making the underwriting decision and you're on recourse for that decision. So in other words, if you get it wrong, you're going to buy it back from the investor and you're going to be stuck with an impaired loan that you have to sell, usually for some sort of a loss. So this is a big step up for a lot of folks. You want to be at a high level of sophistication and have really experienced, at least one highly experienced underwriter on staff to do this, or have an underwriting service in place who's able to handle your volume. And in this case, you are going to fund the loan, you're going to underwrite, process, close, and originate. And when you add up all of the revenues and fees, you're looking at more like 3% of the loan amount plus lender fees. And so you can see the amount jumps up yet once more when you get into that space. Also, you need to make more because you're taking on more risk and there's more expense. Then the final lane there are very, very, very few nonprofits that qualify for this. There's, I think, literally 15 in the country that are approved at this level. We worked with FAHI, a really great organization that has this approval level for Fannie Mae and Freddie Mac for their network. And this is where you become a direct seller to the GSEs or to the secondary market. So you're doing everything that you're doing in the correspondent lane, but you are also you're directly delivering to the GSEs. And in doing so, you have access to additional revenue, but you also have much more additional quality control requirements, and you have some significant recourse requirements, major systems upgrades that also come along with this kind of work. This needs to be done at a really substantial scale in order to pay for itself, and that's why most nonprofits have not reached this scale and volume yet. But you can see that you do add yet more margin to those fees. And there is a service release premium that you gain, the SRP there, when you sell loans to the secondary market. So why don't I pause there if I've gone over all of the things on the infographic, and we could do some Q&A. Does that make sense, Ellie, or should I go through the rest of the slides?
I think go ahead with some of the, yeah, go ahead, Ebony.
No, I'm sorry. It's up to you. If you want to answer some questions now, we can. If you want to continue with your presentation, that's fine as well.
Well, how about this? We'll go through the rest of the slides real quick, and then we'll come back to this slide for the Q&A.
Okay.
So we want to go the other direction, I think.
Oh, what happened? Okay, here we go.
So we'll come back to that. So we're going to take a brief stop on our CDFI and lender services. Next slide. Just so you see, we're telling you what we're up to. So we do provide these services, as you see on the left there. We've got contract underwriting. We provide NMLS underwriters for CDFIs that are originating first mortgages, or they're in that correspondent lender lane. And we do that, as a social enterprise and nonprofit, so we keep it very affordable. We do National Down Payment Assistance Administration. We've got some really exciting things that are coming out this year in the world of special purpose credit programs, and in some really neat pilots with Fannie Mae and home builders and mortgage companies in funding down payment assistance, which we think is really critical to unlock. The other thing I want to say about that one that we've been really excited about is that in the programs that we're administering, we are including a $500 mortgage readiness certification payment to HUD-approved housing counseling organizations. And we partnered with NHRC for their membership to have access to that program. So we're really putting a dollar figure, we're putting a strong dollar figure to that work. We're valuing it, making it part of the transaction, and requiring that the either the donor fund allows for payment or that it's paid at closing. And so that's an exciting thing that we're proud of. But we're doing what we can to drive revenues and show folks that if you want to be doing this work, you need to include HUD-approved housing counseling, and you need to value it and pay for it. The lender operations and management supports, we do some contract work essentially for CDFIs that are experiencing shifts in their staffing or temporary losses. And so we've helped some folks to get over those gaps and get their leadership back in place. And we help carry the water in the meantime as a team of folks that are used to doing that work. And then the last thing we do are compliance reviews. So we do some policy and procedure compliance reviews, as well as quality assurance reviews for lenders. I think, Ebony, that is it. If you look at, if there are any more slides, I'm not sure. Yep. Okay. So we can go back to, and we can put up the contact information, but our website, that's probably the best thing to visit, and it easily gets to us with all the contact info, is homeownershipcouncil.org. With that, Ebony, we can go back to the lending ladder and do the Q&A.
Okay, so we have a few questions. I'll go ahead and ask the questions, and then you or any of your staff can answer the question. So the first one is, if a nonprofit is interested in delving into this type of work, how would one start that process, and what would determine if you think you might be a good fit for this type of lending?
That is a great question. I think the biggest thing, and team, please chime in, is that what we see the folks that are most successful are people who are driving traffic. In other words, if you are attracting consumers, you're making your own pie. If you are attracting your own folks to your home buyer education, pre-purchase work into your organization, a lot of times down payment assistance is a part of being that big carrot. But point being, if you're attracting folks that are near mortgage ready, or that you can work with to become mortgage ready for a reasonable mortgage price in your market, and you are seeing that traffic be your client, and currently sending that out the door to, you don't know who lenders, or to a long list of lenders, and not getting any sort of enumeration for that, or those folks are not helping to cover your operation, then that's the kind of problem statement that we see as the best position to be in, because you are able to, that's your client, and you're able to offer them other services while maintaining your HUD compliance, and potentially be their lender for the first mortgage, or potentially package their loan up, or potentially be their down payment assistance provider. All of those things are revenue generators that help pay for your program. And it's the same client. So, I think you got to ask yourself, are you driving clients, or are you, the alternate would be, the sort of the negative example of that would be that you're only educating folks that are already someone else's client, or you're only educating folks that are in escrow with some other lender. That wouldn't be if that's the 90% of your traffic, then you're probably not going to have an opportunity to offer a product or program like this.
Thank you. So another part of that question is I presume funding for the program is critical, and if so, where would you go to obtain the funding needed for the success of the program?
Well, the whole notion of this is to be, more self-sufficient, if not self-sufficient. So, we're often helping organizations in Climb that already have some form of down payment assistance, and they're deploying first mortgage brokerage. And so they have a lot of the core competencies as a lender of down payment assistance. They just don't originate first mortgages. So when you add on that incremental addition to their existing operation of usually a mortgage loan officer, then, and you look at the revenue that person can drive and the net positive revenue, it is, a sustainable line of business. And so, and we've seen folks, find really wild success in that. The most successful ones are the ones that are able to attract, people and traffic in their market.
Thank you for that. Next question is, does a nonprofit need to be a HUD certified agency?
Well, nonprofits don't need to be HUD certified agencies, just as a statement. But none of these, these things on the ladder here, if we say nonprofits, you do not have to be HUD certified or HUD approved to partake in any of these activities. I would say that it would be curious, how you're getting the traffic, or where folks would become, why would people be coming to you, if you're entering into this work and you don't provide any of these already. There are examples of nonprofits that are packaging for USDA, for instance, that do, pretty exclusively provide that and help the borrower to navigate the USDA system.
Alternatively, you could also work with a nonprofit that is HUD certified, right, to make sure those clients are getting educated and counseled and mortgage ready.
Absolutely. I mean, we in every case are always recommending that first-time homebuyers be HUD educated. So, so to go through home buyer ed. So if you're not doing it, someone should be your partner doing it.
Mm-hmm.
Okay, next question. Do underwriters need a license if the down payment funds come from another city or a city agency?
Okay, so you're generally not underwriting. Well, we don't use that term in the down payment space. So if you're referencing down payment administration, we usually call that eligibility intentionally, because it doesn't reference then underwriting. In general, underwriting for mortgage lending, and this would be for secondary, mortgage products or first mortgage loans, mortgages that carry interest rates and repayments, that, to underwrite as a contract, you do need to have an NMLS license for that. So contract underwriters must be NMLS licensed. That's why our group is, when we do that work, and but in the down payment space, just to make this small clarification, that's not necessarily underwriting because you are not, performing a secondary market compliant loan. So, so those, you can administer a down payment assistance program and perform eligibility, which looks like that underwriting step, but not be NMLS licensed.
Thank you. Next question. Do you have existing relations with lenders, or is our organization completely responsible for creating those relationships?
So the way that we approach this is that we work when we're performing climb, we're in an engagement with an organization, we do a data review of their market, and we take a look at who the top lenders are. We then take a look at, of those top lenders, we can slice and take a look at who does what with second liens. We can take a look at minority lending penetration, and through that multiple lens approach, we usually come down to a short list of recommended wholesale partners. But just to answer your question, we take a data-based approach on who the best partners are.
Thank you. You may have already answered this, but for a CDFI credit union already regulated by NCUA, is a state broker's license still required?
For mortgage brokerage, that activity in the origination of the first mortgage, you will need to be NMLS licensed. That can be an NMLS exempt license for your state, but any originator of a first mortgage or anyone who's must be NMLS licensed, and their organization must be, whoever they're working for, therefore must also be NMLS licensed.
Thank
Banks, correct, Gabe?
What's that?
Not the bank institutions. The loan originators.
Banks would be, right. The only exception is banks, right? But you all are not a bank, right? So.
Right.
Thank you. Someone wants to know if there will be any further trainings on the first 3 steps on the ladder for small nonprofit organizations.
We, well, it depends, we've got, it depends on whether intermediaries are, are putting things like that on. We can tell you that OISTA, who's a, recent addition to HUD intermediary, has us, they're looking at doing something with us like this for their groups at a conference. We're certainly open to it, and we have, all the methodology packaged up.
Okay. Someone wants to know, how is the revenue taxed?
Sorry, how is the revenue taxed?
Yes.
So, well, I'm not a tax attorney and I'm not your CPA, but if this is, you have to determine if this is unrelated taxable income, unrelated UBITA, unrelated business taxable income. And so, for many organizations whose purpose is, home ownership or housing affordability, this would not be UBITA, or one could easily argue that this work for a mission client is definitely not UBITA. Where you may run into it is, let's say you have a client who comes in and gets a jumbo loan with you. Well, this is not a low income person. Maybe they're not a minority. Maybe they're buying outside of the area. In those, there are reasons why something may not fit within your mission. And if it doesn't, then you do need to call it out. If it reaches a threshold, there is a way, a methodology on this, but most nonprofits never reach that threshold and are not in that space or competing for that client.
Thank you. Next question. How much capital is recommended to begin DPA lending?
Well, I think that's an individual question as to what works within your organization and what you can support. People get started with not much, so it happens all the time. I ran a NeighborWorks organization for 13 years, and we used to get a small amount of capital each year. I think it was $150,000 that we put into a DPA, and closing cost assistance program. And over the years that built, and we raised other money for it, and that fund got larger and larger, but it all started with something small.
Thank you. Last question. How should one go about obtaining the NMLS license? Is there a course to take?
So for an individual originator, there are courses and requirements, and those are all by state. And for an entity, there are also requirements that are by state. And all of that information is actually really accessible and easy to find on the NMLS website. So go to the NMLS website, look up your state requirements, look it up for both organization and for individual mortgage loan originator, and you will have the answer for your requirements for the organization and requirements as a loan officer.
And whether or not there's an exemption for your state.
Right,
That's right.
that'll be there.
Yes.
Just Google NMLS and your state and you'll get that page, because NMLS is broken down by state.
Yeah. And pretty much every state licensing that we've seen in the last couple of years has moved everything through NMLS. So, and that is the main system to do everything through.
Thank you. One other question did pop into the Q&A box. It says, can you do the first mortgage broker track without doing DPA lending?
Yes, I mean, you have to, I think the question is, how are you getting clients, where are your customers coming from? But, if those folks are not in any need of down payment assistance, then, it's back to that UBITA question. Is this an on mission, or is this potentially taxable activity? You'll need to track all that. But theoretically, yes, you can absolutely do first. I mean, if you look at how mortgage brokers exist today, none of them usually have anything down payment assistance. What's really neat about nonprofits that get into that space is that they often do, and that makes them special and different in their market.
And you can also, partner with like the municipalities that do have the down payment assistance.
Yep. One thing to keep in mind is that a lot of municipalities have some preclusion for brokers. So do check your local guidelines and check your local programs there. Many times they will restrict to lenders only and not mortgage brokers. And so you wouldn't be able to access it until you were in the dark blue lane there.
Mm-hmm.
All right. Thank you so much, guys. Thank you for for your presentation today. I'm going to turn it back over to Bruce, and he'll be able to close us out today. Bruce, it's in your hands.
Thank you so much, Ebony. And Ebony will get out a summary email with the links to the recording, but also the resources and the contact information for the Homeownership Council of America. So we always like to remind people that you can join NHRC or please renew in 2022. We had a good year in 2021. A lot of renewals and a number of new members. And we really appreciate that several organizations have upped your commitment to us in terms of increasing the amount, which indicates two things. One is that you like what we're doing, we like that part, but also means that your budgets are doing a little better right now, and we're glad to hear that too. The reason to join, of course, is to support the advocacy work and the educational work we do. It's really what makes us thrive and makes us happy here. We're trying to figure out how to increase our staff and our capacity. I think one of the big areas that we're going to do that will be a kind of a growth area for us is going to be outreach and marketing. And everywhere we do that, we work with local housing counseling groups to expand the client flow that you get. So again, it's all kind of mutuality. There's some benefits. We have a discount on your credit report through CoreLogic Credco. We have Savvy, which my understanding is it's being underused. So this is a good tool for your staff. One of the recruitment things of great value is for our field is that people can qualify for the loan forgiveness on federal student loans. And Savvy helps people both sign up for it, but also document it. That the turn down ratio has improved a lot thanks to the waiver that the Biden administration has put into place, the Department of Education. But the one problem that it doesn't solve is documentation. And what you can do as an employer for your staff, and what Savvy helps also, is you can file every year to document your eligibility, and that makes it much easier at the end of the time. Also, Savvy will help you figure out if you have the right loan types, or if you need to change what you're in, or if you're eligible for the waiver if you're far enough along. So all good things. Deeper dive of that on our webinar last was it November, December, and of course all our webinars are on the website. You can go back and take a look. And periodically we come across some interesting funding opportunities that you might not normally see in the normal flow of things, and we send out an email to members to notify them of opportunities. Typically it's grants, sometimes it's fellowships, occasionally it's unusual media opportunity. Get an organization on some documentary or media opportunity as well. But you know, the real thing is that we're doing the work for you, and you're doing the work for us. Really appreciate all that you're doing in the field, and really helps everything we're doing. There'll be plenty more about all this in our next calls coming up. But that's it for today, and thank you everybody for joining. And just to remind you, we have that sign-on letter. And Ebony, if you could put it out again onto our list, that would be great. And I'll do it on some of the other lists as well. We have some 50 some odd signers as well, a mix of national groups. The realtors just decided to sign on, and we've got some of the other financial services industry trade groups looking at it seriously. So it'll be a nice group of housing advocates and industry coming out in favor of this. Not the only tool in the box here. Certainly, if you can take the time to talk to especially your Senate offices right now, talk to them about talking to leadership about two things. One is the FY22 appropriations, having housing counseling as close to 100 million as possible. And the second one is to make sure that housing is included in whatever budget reconciliation bill comes through. Keep an eye out for emails from Christy. We'll be doing special outreach. I'm sure West Virginia is in the loop coming up, and probably Arizona as well, but other states as well. We just did Georgia and Florida. Okay, thanks everybody. Glad you're doing the work you are out there in the field. We'll talk to you shortly. Bye.
Thank you, everyone. Bye.